All right. So everyone bear with me because I'm probably going to screw up a few times because I'm on the spot. But anyway, my watch list is pretty simple. My trade plan itself is pretty simple, the midpoint trade plan. I tried to make everything as easy as I possibly could so that everybody can understand what to do. The rules are pretty simple. There's not a lot of them, but I'll go over everything. To start every morning, I try to make sure I post a watch list here, just a basic rundown of the six tickers that I'll be watching. I primarily focus on six tickers every morning. Some days I do post a side play or two. Just depends on what kind of setups I see that morning. But you can always expect at least six tickers. And I just give a basic rundown of why I'm looking at it and what I think it could do. Whenever I actually post the charts here, it's all pretty self-explanatory as far as if you see green lines posted to the upside, then I'm only watching, in this case 3M, I'm only watching it for calls because I only have green targets marked on it. So same thing here with CVS, green lines, Cisco's green lines, and then like Carvana, S&W, Apple was only watching them for puts. Some days I can set it up to where I have like three tickers on the top for calls, three on the bottom for puts. I try to do that on more indecisive days. But when the market's really trending in one solid direction, I normally have at least like five to say to the upside and maybe one to the downside. Average right now is anywhere between two to four tickers a day that typically present good entries and good exits. On occasions, there are stop losses that get triggered and make you lose on the trade. Normally, those stop losses are minimal, but everything is really defined. So I'm going to go over some of the charts. These were from Friday. I have six tickers here, and then here in a minute, I'll get these other tickers pulled up after these ones. I got a couple more to go over. Lyft was the first one from Friday, and I like to look for stocks that are opening near the midpoint. So it generally takes me about an hour. I start looking at about 8 a.m. I start looking through a list of roughly 200 tickers, and I'm constantly updating my watch list, removing some tickers, adding new tickers. I try to add only the best tickers that have good options to them, good volume and open interest. But the closer price is to the midpoint, the more of a defined move you get because whenever price is coming off of that midpoint, you can see how much more momentum is in these plays. So we like to catch large momentum pops. So the closer you can get your entry to that midpoint, the better off your chances are of actually winning the trade. And this is the Hall moving average set to a length of 30. And I've tried a bunch of these different lengths, and like the 60 average does work pretty well. But for my trade plan, the 30 works the absolute best. It's nice, simple, easy to follow. I don't like having a whole lot of clutter on my chart, so only having one line is perfect. I can still see the price action, what the overall trend is doing. And I know that as soon as I see price above this midpoint, I already know that the chart is bullish since price is opening above that midpoint. So I'm only watching this chart for bullish plays. So as price is coming up here, it's crossing over midpoint. It closes a candle fully above the hull and fully above the midpoint, and it's a green candle closing. So that tells me that that's a nice time to go ahead and enter that trade. So after that candle closes, I'm in at the open of this next candle at 12:30. And your entry will vary just a little bit from that open because it might take you a minute or two to place your order. Normally, especially on like bigger moving stocks, you just want to go ahead and place a market order. And sometimes that candle, that this was a good trade, but sometimes that candle might pull back a little bit at first. So you do run that risk when you enter right away. But like in this case, if you had entered right away, you would have immediately started making money off of the trade. From there, you could have took profit at any of your target lines, and the only time you would exit this trade is if the price were to fall below that whole moving average and we were to close a solid candle. So in this case, up through here, if you had got in here, you could have held this through, hit target line right there, hit target line right there, hit target line right there. At no point did you have a sell indicator and continue to go up there. If you had another target at like say the top of that wick, you could have took profit there and rode that whole trade without any issue. And then as soon as the price started to pull back and it closed a full candle below that whole moving average, that's when you know to go ahead and get out of your trade because that the momentum's done. There's no more reason to stay in this trade anymore. I picked
Which
this.
Harlan, if you could, if you let me add this on the end, that first entry, if you guys don't know, you could use the same concept. Me and Chef cover this a lot when we do zones and BB system together. But just like that, with Harlan's midpoints, you could treat that as a 40% entry on that one he has highlighted, and then on the retest, you would treat as an 80% entry, just like the BB
Oh,
system. You have two types of entries: the breakout and the retest.
yes, definitely. Oh, I also forgot the lift also made an entry right there. That was a better one since the price was literally right beside the hull while, or but right beside the midpoint while the hull is crossing up, and you're breaking out of a consolidation right there. So if you got that, that was a hell of a pop. But you couldn't have traded options on it, but you could trade stocks on a pre-market if you're on like Webull. And a lot of the times, there are entries that will present very well before the bell, and I try to call them out because sometimes, like, if that were to form closer right there, we might be able to get a candle that's like maybe up here or something on the open and get a real strong momentum pop on it. I try to call them out when I can, but we don't primarily look for them. But the reason I picked this stock, the why I liked it to call out that day, is because when you go to the daily chart and you look at the trend direction of it, Lyft had already closed. Well, at this point, it was closed price above the hull. I like it better when the candle is fully closed above there, but because price closed above the hull, that already told you that it was in a bullish trend. And you have this is a measured move up pattern right here. So measure moves up are my favorite pattern. They have a lot of momentum behind them when you get the breakout, and they're easy to see. You normally get here's the flag of everything. Price goes sideways for a little while, or the flagpole, and then price goes sideways for a little while. You find your consolidation range that it keeps getting stuck in, and then whenever it breaks out of that consolidation range, that's the start of the measured move up. And from there, you a lot of the times the same move that happened here, you can expect to happen here, and they like to match it a lot of the times. So that made Lyft a really good candidate to day trade that day, and line that up with the fact that it was right at the midpoint and made it that much better to watch that day. Then you got Marriott. This was a really good one. See, price would have been now. You can enter on that candle, or you can wait until the hall closes, and you would have entered on, say, something like, or crosses down, then you enter something like that, or maybe that. But this was a little bit more risky just because that hall is up there, which means that your stop loss was wider if you would have gotten to this trade. The farther away the price is away from the hall and the midpoint, the further away your stop loss is. So the closer you can get at them, the better, the less risky the trade is. This one ended up being a really good one, though. It did fall down, and here you can actually see it made a measured move down. Um, the consolidation was right through here. Actually, in between these targets was consolidation. And as soon as it broke out of that, continued down to the final target. Your stop loss, if you hadn't sold at the targets, your stop loss would have been right here at 12 when this candle fully closed. It would have been a profitable trade no matter how you played it. This was a good chart because the candles were trending below the hull. We had a red candle on the day before, so it made me think that it was going to continue down. And then you mix that with it opening up near the midpoint, and it was a good trade setup. Let's see. This was also a really good setup because Marriott's price was so high here. There was virtually no midpoint support or resistance right through here. So I'm gonna zoom in on this. So I forgot to touch up on this on the first chart, but I draw my support and resistance based off of previous days, midpoints and support and resistance, because this indicator will show it for every day for however long you pick. And it only does it on like the 1 day or the 4 hour, the 2 hour, the 1 hour. It doesn't do it on like a 3 day chart or a weekly chart. But so you go through here and you look, and the bottom of that wick was actually a perfect support zone. So that's where I had one level drawn. And then from here, I just had to pick other levels that I thought were good. Like here's we're coming up to a wick support. Here we're at a wick support. Here we're at a body support. Here we're at another midpoint support. So this whole gap right through here, there was hardly any midpoint support or resistance. So that means the price has a larger chance to fill that price area. And sometimes I refer to that as a price gap. And that's just because there's really no reason for it to not want to go to those prices because all these midpoints, they're major market maker moves. Like, I mean, like I said, whenever you see a stock coming up to that midpoint breaking out, it typically has a large move. So that means that all these are major support and resistance zones that you need to pay attention to. Viacom was a real good one. We got uh, here, yes, this will be a good example. Viacom, you did technically get a confirmed entry right there. And if you would have bought into right there, this ended up being a stop loss because that candle just barely closed below that whole moving average right there. So you would technically, by the rules, you would have sold out on that. Now, price came back up again, and you could have got in right there, and you would have had to have sold out on one of your targets because if you didn't, you would have ended up stopping out right here, which would have been an almost break even stop. You got another entry up here where again you hit targets, and even your stop would have been higher than your entry. So Viacom was a decent one depending on how you played it. You can't always be greedy. We always touch up on take profit at the first target. So especially with my trade plan, it's not a bad idea to like right here buy in on the confirmation of it, and instead of but spending a lot of money on like one contract, maybe get you say two or three of at a slightly better price. That way you can scale out of it. And at first target, go ahead and sell one or two of them and then see if you can keep riding it. But for the most part, always try to cash out that first target. And that way you know that you've won the trade and that's your best odds overall. But in some cases, you do get runners that will keep going, and this trade plan calls out those runners very well, as we can see. GE technically did follow the trade plan. I mean, it confirmed entry right there, and it granted it only moved 5 cents, and then it hit price target, but followed the trade plan. Stop loss would have been right there on the 9:50 a.m. candle. Let's see the daily. Yeah, GE I thought was going to be bullish that day because of how the day chart was moving. I ended up being wrong. It couldn't keep up the momentum. SPY. This was a good one. Confirmed entry at 10:20 a.m. right there. Price hit the next one, two targets. It was a perfect hit. And stop loss would have been right there. Stop loss would have been close to break even from your entry. Your entry would have been more up than there, but by the time you add in theta and delta and everything, it probably would have been close to break even. But even so, that was a profitable trade no matter how you played it. Yeah, that was big bearish on the daily. Price is trending below that whole 30. My trade plan goes by more of trend than anything else. I know all the exponentials will show you the moving average and stuff, but the whole moving average really it defines the trend so much more, in my opinion. I've spent years working with the whole moving average. Like I love it so much more than an exponential moving average or a simple moving average. Fastly was a great trade. We got a great entry at 9:40 a.m. Price hit all targets. I didn't have enough targets marked because I didn't expect it to fall $6, but this called out an entire $6 drop on Fastly. So, like I said, if you get in at the trade at the right time, I mean, this can cause some really big moves. Not every time you see a confirmed entry too is going to be the perfect entry. You got to look at overall price action as well. Make your judgment there, but that really helps you if you have a trade plan that you like or something, and you look at it and you see, hey, it's confirming an entry on my trade plan, then that just backs up whatever your trade plan is. Fastly. I liked that one for puts because price was bouncing off of this haul, and I knew the news that was happening that day, so I was already expecting a bearish move on it. So when it was hitting that haul, I was already expecting it to make a lower high and reject off of it and push down further. And we were also coming out of a measured move down right through here. You see the leg is all the way here, and then consolidation here, and then pushes down further here. I'm telling you, learn those measured moves. They're the best. Them and bull pennants. And then we're back to lift. Okay. Let's see, I've got a couple more charts here we can go over. Do DE. This one was a bust, but this one was also a riskier entry because the haul was so far away. As price was confirming a candle below the haul and the at the below the midpoint in the haul moving average. It was riskier because of that, but it did start to drop initially. My target was just a little bit too far away, so it didn't quite hit. So if you didn't sell out there, you would have ended up losing on the stop loss with a confirmed exit right there. And if you're really careful, you really don't want to lose money. Your stop loss can always be as soon as price is starting to hit the midpoint or starting to hit the haul. Just a lot of the times, if you look back over the charts, a lot of the times, whenever price is battling that haul, it'll actually slow down and reject a lot of the times. Or if it does break out, it's obvious. Like I don't know, just look over your charts and decide how you want your stop loss to be. But that's how I like. I like to just wait for one candle to close behind, above or below it. Let's see, BG. This would have been a quick one. Risky because the hull is so far up there, but candle close there. You could have entered at the open around 75.52. Would have been a 20-cent drop to price target and another 30 cents there. So about a 50-cent drop if you sold right through there. But if you didn't sell at price target, you would have ended up stopping out at a loss. Fubo was a good one. Entry would have been at the red candle close of 9:50 a.m. So you get in, and we went a little bit sideways here, but when price broke out, that broke out of a measured move down there. There was the consolidation level at 29.05. Below that, we fell all the way down and hit all targets. Even if you had stopped out on the trade, you would have been profitable. Kroger was a great trade. We entered there. Our first target actually ended up being the best target. Price ran all. And this was I mentioned the momentum trades earlier. This is one of those ones. Price confirmed at 8:50 a.m., but we couldn't enter options until 9:30 a.m. So in a case like this, if you think that chart's bullish enough, then you have your confirmed entry here. So as soon as price opens, you could chance it and buy in and try to catch that initial momentum. I only recommend this when stocks that you're really bullish on. I really liked Coke on the daily, and because price was opening, we had just closed that price right there on the haul, and then the next day price was opening above it. So that made me really bullish on it, and I actually mentioned this one right at open that we could have got it for a momentum play, and it played out perfectly. But be careful on them because I mean the momentum can shift either way. Trading before the first 15 minutes is always very risky. Even trading before the first 30 minutes is risky. Then we had FSR. FSR was a good trade as well. Entry was right there at 940. Fell all the way down, hit all but one target. Even if you stop lost out, it would have been profitable. We'll look here at how I do some of these targets real quick. So, like in this case, looking at the chart, I see. Oh gosh, what did I just do?
Phase scores.
Okay, there's a midpoint support. So price was opening right about at this midpoint. I always like to mark my support resistance based off the tips of the wicks. Sometimes I go by the top of the body right there, but for the most part, I always try to pick the wicks because they always seem to be the most major support resistance areas. So because midpoint was right down there on that support, that's the line I marked 2104 because that just double confirmed that yes, that the tip of that wick is a strong area, but the 2104 is probably the strongest part of that area. Then going back through here, there wasn't enough support resistance, so I picked a level right through this body that I thought was good. That lined up with something over here. Oh wait, no, that was the 2104. Okay, this was the one that I put on the wick. Yeah, because there was no midpoint support resistance right through there. Fisker didn't really have enough example. Let me get a different chart. Let's see. What was the ones I did earlier? Fubo. Okay, Fubo is a good one. You come down through here, a lot of this consolidation. I marked the bottom range of the consolidation, which was at this midpoint support. And I normally go like 1 or 2 cents off of the midpoint. That way, you guys are getting out of the trade before it's actually hitting the intended target because you don't want it to hit the target and then immediately start retracing. You want to get out of it while it still has momentum. So I don't like to always mark it right on the midpoint unless like I really think it's going to hit that level and keep breaking out. But here I tried to mark the bottom of this little channel on this midpoint area, and then here was a strong level on the breakout of that channel. This is like the halfway point of the channel, and up through here was the top of the channel. You can see the midpoint there. So I just kind of use those midpoint zones as like, hey, this is correlating with what I think a good breakout is going to be. So this specific level is probably the level that I need to watch for, and they're pretty powerful levels almost every single time. Does anyone have any questions on anything?
um, could you drop the TOS script for this in your channel after we're done here?
Yes, definitely.
All right, cool.
If nobody has any questions, I think I'm done. I don't really have much more to go over. I am still trying to fine tune how I pick my charts every morning. I already have some scans going, and I'll share them once I get everything exactly how I want it. So some days I'm kind of hit or miss with the watch list, but for the most part, I do average at least 2 to 4 picks almost every day that work pretty well. So just bear with me for a little while I fine tune everything, but so far everything's working amazingly. Now I'm done.
Well, we appreciate your stream, Harlan. We're gonna try and have more workshops like this, guys, where we cover some of the stash channels. They'll go through their systems, cover more in depth. If you guys have any questions, please tag Harland in the trade floor, and he'll be sure to answer you guys. And he's gonna drop that TOS script in his channel right after this.
Definitely.
But we're gonna have a couple more like this. We'll have one with me and Chef. We'll have one with 10 man, another or one with 10 man. We'll have a few others with other analysts and stuff. But this was the Harlan edition. I recorded it all, so if you ever want to go back on it or check out his other videos, you can. He has other info posted in his channel, pinned to the channel, and on our YouTube. So make sure to check that out. But yeah, thank you, Harlan. I appreciate that.
Happy to.
All right, well, we'll see you guys in the morning. Hope to catch you guys in the voice chat.
Bye, guys.